Investors like us who are looking to protect our capital during market volatility and downturn are looking for secure and trustworthy financial institutions. Currently, there are many ways to invest your money and get income. But as you all know, interest rates are over the roof, which means your money is losing value. But what if I told you there was a certain method to increase your savings by 6.89% annually? Now, Treasury I Bonds make it a reality. If you want a certain strategy to keep up with inflation, you need to go no further than the government-issued Series I Bonds that everyone should have right now. And in this video, I'm going to talk about Treasury I Bonds and a step-by-step guide on how to buy them. So, what are Series I Bonds? You see, the United States Treasury issues bonds known as Series I Bonds. In the late 1990s, they were developed to help investors get consistent returns while still safeguarding their spending power. Now, there is a fixed interest rate and an inflation rate, both of which are reviewed and adjusted every 6 months for these investments. So why should you get them right now? Now, investors are generally bearish or uncertain about the stock market. For this reason, stock market investments might not be the best bet right now. And as a result of the current market climate, bonds and I bonds in particular appear to be a safe investment option. This is because taxpayer contributions are in perpetuity essential to government operations. But here's the catch. Bond prices are expected to decline as a result of the Federal Reserve's ongoing interest rate hikes. In fact, the bond market is already collapsing because of this. For instance, this last year has been quite difficult for the Vanguard Total Bond Market Index Fund Admiral shares. Additionally, we are facing unprecedentedly high inflation rates, which further devalues most low-yield bonds. This is precisely why Series I Bonds exist and why they are always called upon to rescue the day. Of all, the most pressing concern you all have is why Series I Bonds are immune to inflation. Therefore, they are inflation resistant since you will earn both fixed and variable rates of return, the latter of which will fluctuate following broader economic trends. Even weirder, Series I Bonds offer guaranteed returns, making them almost immune to market downturns. And this may seem like a secret formula to win big in the bond market, but these assets are genuine and lawful. Actually, the United States Department of the Treasury funds them. Now, let's talk about the mechanics of Series I Bonds. It's crucial to have a firm grasp of the ins and outs of your investment vehicle before putting any money into it. And interest on Series I Bonds is compounded semi-annually, so you'll get a new monthly payment. Specifically, you are receiving a rate of interest that will not fluctuate, plus an inflation adjustment rate that will fluctuate every 6 months. This compounding interest can continue for as long as 30 years or until the bonds are sold. Now, let's talk about the few drawbacks of Series I Bonds first. Although I know you're all dying to hear about how awesome they are. Experts believe that the lockup period is the primary drawback of Series I Bonds. Series I Bonds are required to be held for a minimum of 1 year, and the bonds include a penalty if you sell them before this period has elapsed. In 2022, with the markets how they are, experts don't see the 1-year lockup as a negative. Price increases across the board are inevitable due to the current economic climate, and this trend will continue for some time. Now, if you cash in your savings bonds before the 5-year lockup period is through, you'll forfeit the interest on the most recent 3 months. However, there is no penalty for selling beyond the initial 5 years. The lockup period will not negate any profits you make, so say the experts. And investors stand to gain the most from these Series I Bonds if they view them as long-term investments and hold on to them through the ups and downs of inflation. The interest you receive on your Series I Bonds is adjusted for inflation every 6 months, which is another drawback. Furthermore, your profits are limited to the duration of a rising rate of inflation. It should come as no surprise though, as Series I bonds were created expressly to safeguard investors' buying power against inflation. The last major drawback to consider is that you must pay federal income taxes when you sell your bonds. Of course, this isn't unique to Series I bonds, and it's true of every income-generating instrument. Therefore, this is not a serious drawback. Now that the problems I've outlined are minor is plain to see. In fact, as you're about to discover, they are much outweighed by the advantages. Now, let's consider the advantages. One obvious advantage is that investors like yourself are assured a return on investment of between 7% and 10%. This is a very high yield compared to the interest rates of comparable bonds. Protecting your savings from the corrosive effects of inflation is a typical concern for any investor, and the Series I bonds are a great way to ease that mind. Also, you may hedge against market downturns using Series I bonds thanks to the US Treasury's backing. And compared to public assets, private corporations have no obligation to return your money in the event of a market collapse. The other major benefit is financial. Federal taxes must be paid on Series I income, but no state or local taxes are required. This signifies a significant financial gain if you happen to reside in a high-income tax state like California. In addition, did you know that if you utilize Series I bonds to pay for school, the interest you receive is not subject to federal income tax? In other words, you won't have to pay taxes on the interest you make on your Series I bonds if you use it to put your kid through college. This is only possible if both the bond redemption and the usage of the proceeds take place in the same year. Now, before we continue, I'd like to thank you for getting this far. And if you want to know how to invest in I bonds, then make sure to stick until the end. You're probably wondering, this is fantastic, but where do I go to really purchase these I bonds? And you're in luck because I'm going to demonstrate how to do it right now. First, you must go to www.treasurydirect.gov. And right now, you may buy these I bonds at the current rate of 6.89% until April of 2023. In general, this rate will be in effect for the subsequent 6 months after the transaction is made. Then, move on to where can I get I bonds, and it will lead you directly to that subsection. The yearly limit is $10,000, and the maximum amount you may contribute using your tax return must be submitted on paper. Moreover, the annual cap is $5,000. You can now enter your login information. Now you may log in if you have an account or create a new one by clicking the corresponding link. Once again, the first thing to do is decide what kind of account you want to open. The second step is to, provide a lot of personal information. And step 3 is picking a password and responding to certain security questions. It will take around 5 to 10 minutes to set things up, so go ahead and click Apply Now at the bottom. You'll be able to choose the sort of account you have and the legal holder of that account. You guys are probably going to opt for separate accounts. However, you may now choose one of these options if you want to purchase it through a company, estate, or trust. Now, just keep it under individual and hit submit here. After that, fill up your personal details such as name, birthday, address, phone number, email, and bank details from which they would withdraw the money. And if you're done filling out the form, click the submit button. It will then ask you to evaluate all the information you put in, so you'll browse through here and ensure it's all accurate. And if it is, then go to the submit button. Now, it will make you choose a personalized image/caption. So just select any one of these and then give it a caption. Next, it's going to ask you to select a password. So you're going to make a passcode of at least 8 characters. Then just choose 3 security questions. After that, hit submit, and then you're going to come to this confirmation screen where it says they're going to send your account number to the email address you enter in the application. After that, return to the Treasury Direct homepage. The next step is to enter your login information. Click Login and enter the account number you received in an email. There will be one more security check and you will get a one-time passcode through email. Simply check your inbox and paste the contents here. Click Register this computer button and then Submit. The next screen will prompt you to enter your password once more. And now that you've arrived at your homepage, you may purchase I-bonds directly from this menu. Now, when you buy bonds, they'll ask you what kind you want. You'll have to enter your purchase amount when selecting Series I and hitting Submit. Put in the maximum amount of $10,000 as that's all you can spend. Additionally, it will inquire as to how often you make purchases. If you like, you may also set up recurring purchases at predetermined intervals or choose your own convenient dates. You may just click the Submit button after leaving these blank. Then, make sure everything is right and then hit the Submit button so it can ask for your approval on the purchase. And yeah, I think it sums up the whole thing. You have made the wise decision to invest in I-bonds. One more thing before we wrap up today's video, the annual limit for purchasing bonds online through Treasury Direct is $10,000. Each year, you can invest up to $5,000 in paper bonds, but you must be a U.S. citizen or permanent resident with a valid social security number in order to make one of these transactions. So, are you now thinking about investing in Treasury I bonds? Let me know your thoughts in the comments section below. And while you're at it, make sure to smash the like and subscribe buttons as well. Now, we recently made a video on how to maximize your I-bonds investment. And if you want to know more about this, then make sure to click and watch this video right here and enjoy. And that's the end of this video, guys. See you next time.